All right, testing the screen share and mic check, please, with the recording on. Testing 1, 2. Okay. All right. Good evening, guys. Nightly strategy podcast for March 21st, 2022. Thanks a lot to Phil Wu and the interns for putting together a readable summary of the sketches we made on it was a Saturday night podcast. That was a walk through the world of experiential learning, skill mastery, ways of knowing that comes out of the true storytelling tradition and the true storytelling circle. Some useful documents for recording your travel log as you go towards the path up the mountain, if we can say it that way. And then sort of a martial arts approach to craft knowledge and the reciprocal learning relationship between teachers and students as a way to advance knowledge of a craft. There were a few other things in that 90-minute presentation, but this is capturing the biggies. I thought it was pretty nicely done. Rapid turnaround, and appreciate the work the fellas did on that. Griff Cooper also sent along an artifact where he is documenting his approach to the daily challenge of the kata for EWZ on the supported spring crossing, kata 2, and collapsing dragon. So he's working one symbol each day, those 3 patterns, plus integrating those patterns as a way to clarify rules and to look for error-free performance. And the document he's put together looks like a pretty nice rubric for people that are looking to apply those rules mechanically against one symbol and as a way to document your work in progress. So, hat tip to Griff for doing some really nice work on that. He also added a flashcard, a Cornell note sheet on the lecture we did on exit strategy to include some of the Q&A from the previous week in Foundations that I thought did a great job of capturing those moving pieces. So both of those products he did, plus this one, I think are well worth your time. And we just want to acknowledge the hard work that those fellows are doing. As part of that discussion, I have been talking a little bit these days about my thoughts on the trader's mind. To me, the trader's mind is a holistic collection of craftsman tools that equip us to walk the path towards the mountain and to climb the mountain. And it includes these things here: the understanding of experiential learning, your learning preferences, tracking your own skill through the phases of mastery, acknowledging and accounting for and appreciating the 5 ways of knowing from the Walking Man, the skills that it takes to be a good person inside a true storytelling circle and to tell true stories, and also to learn how to listen to them with an open heart and mind as a way to generate opportunities after you leave the circle. So how to do that is a very emotional intelligence, emotional IQ, almost a spiritual journey in some sense. I was in a true storytelling circle this morning with my Native American spirit guide, Mike Three Bears, and David Boji, who was one of the co-creators of True Storytelling and is my doctoral mentor for 20 years, I guess. And he's living a true story of stage 4 cancer and living it with an open spirit and an open heart, embracing every day that he's north of the dirt in the sun. And he's writing another book, because that's what he does, is about what he's learning along the way through this experience in life and playing the cards that he's been dealt. And so we had a pretty moving story circle this morning, I can tell you, because we did. So all of these elements here are parts of what I think are the trader's mind, but there are other things too. I mean, there's obviously the technical skills that I think are addressed in the foundations course and some of our technical trading, and really all of the systems that are out there to be traded, whether they're ours or not. I mean, all of those have elements of technical craft mastery, and that's what makes it so interesting. But there are also things like systems thinking, Fletcher's creativity, some of the neurobiology coming out of the Huberman lab at Stanford that talks about the biomechanics of your brain, the bioneurology of that, and what works biologically speaking in terms of goal setting. How does your body actually use biochemical reactions in the process of rewarding some goals and diminishing other goals? How does all that work, and what can you do about it? Can you reverse engineer that to help with goal setting? It turns out that you can. The Fletcher creativity, I think the manufacturing quality control, Kanban, Kaizen style of Japanese manufacturing is especially well suited for understanding the way that we approach trading as a manufacturing process. So there's a bundle of these things that collectively I think of as the trader's mind. The one I want to talk briefly about, I mentioned the other night, was Protreptic Coaching. So I'm working with the True Storytelling Institute. That's David Boji and Jens Larson, who also created the Protreptic Coaching. And that is a particular style of coaching that I think is well suited for people that are looking to discover knowledge of self at the values level. So all of that's going into a little bundle that we are going to prepare a presentation to the Van Tharp Institute on as a way to grow upon the principles and values of Dr. Tharp's legacy, and to continue to grow towards abundance with a healthy respect for where we're coming from in the mountains we choose to climb. So I worked on that with them today. We're envisioning an approach that features something like, for each of these bodies of knowledge, a field guide like we did with the Fletcher Creativity Handbook. I helped him modestly take his life's work and his best-selling books and courses and research and crunch it down into a pamphlet-sized 100 pages, 30 best ideas with a top 10 list and lots of short practical exercises designed to stimulate and promote creativity. From that, we have built a self-paced home study course on creativity, actually 2 of them, a facilitated hybrid course where you do the home study course, but you also engage in a small group learning with a faculty, me, on the insights from each of the 30 lessons. There's a possibility of live workshops, specially designed creativity workshops, and then maybe someday a certification workshops. Those are to be explored in the Fletcher. But the True Storytelling guys, I've got them working on exactly the same thing, the same path to mastery for True Storytelling and Protreptic Coaching. And I'm going to add things like the systems thinking, technical trading, manufacturing point of view, how to do trading as a manufacturing process. Pen is unforgiving. So each of those bodies of knowledge, I'm modeling after this same path. I think each one of them deserves a concise handbook that can be read in small bite-sized chapters, home study courses, the opportunity to do those with Q&A and getting direct personal feedback on your work. Not everybody wants that. Not everybody wants to pay for that. So I feel like it's important to have both of those approaches. And in the future, I'm open to some of those becoming live workshops again. I don't know how much value I place on live workshops where you got to travel a lot. Although there's something to be said for peak experiences, you know, the joy of working together in the same room with people. There's certainly a lot to that. So once COVID makes it a little easier, maybe there's more of that in the future. But anyway, today's work was with those guys was on true storytelling and protreptic coaching to help give them a vision of what I want their field guide to be. So that's where we're heading with that. It turns out that the true storytelling circle is an unbelievably powerful way to build small communities of practice that are devoted to each other's perspectives and point of view. We've seen that in our work. I'm watching the Tharp Institute's workshop on, I think it was some wealth creation or something like that. Chris, I think you've been sitting in that. There's some really strong benefits that come from organized study groups. We know that from the super traders and from the study groups that we do at the military college and in our own trading practice. So just a preview of some things to come. Let's see. Let's just jump right into it. Let's see what we got for today. All right. So the last 4 days had really been a strong upward move and got to the far side of the river. Today on a Monday was no gap, and then what ended in a doji that fought right back to zero to close at 444. So to me, this is kind of like the perfect. I think of this as the 12 o'clock position on a clock. If this was the 6 o'clock position down here in the land of suffering, and halfway, something like 9 and 3. I feel like when this thing arcs into and then starts to come into the station up in here, that we are creating really a nice, concise, critical state inside that auto framer box that TC 2000 draws for me automatically. Awesome. And I feel like that's, possibility of breakouts in either direction is what I'm looking at. So a breakdown below the low of the day will be of interest, with the target at the Bollinger Band mean, spine of the dragon, RL30, belly of the dragon, or lower skin of the dragon, then belly of the dragon, PSAR in here. So there's a whole series of checkpoints along the way that would trigger a retest of the 10-day low back here at 418. By the same token, to the upside, we're already through this temporary peak here in the RL10. I mean, we're right there. And then that really only leaves the peak of the dragon, the peak of the RL10 en route to the 10-day high. So yeah, could it get there in one day? Yeah, all it has to do is the same size move as it had these days, gain some acceleration, and it gets to the Z2, then Z3, and the RL270 in the normal course of events. What I would say is, if it just maintained the last, the momentum of the last 2 days, looks like this blue line here, the whole 3-period moving average. So that's the slope, therefore the projection. So if nothing were to, so the argument here is that if there's something about these last 3 days that represents normal, whatever was normal for the last 3 days can be expressed as a whole moving average, which is front weighted on the most recent and least weighted on the back one. So you get this front leaning estimate of fair value. So for each day, it computes that here. And when you look back 3, you end up using a factor of 3, you get that kind of a curve, which is pretty adaptive to the current level of momentum. So my hypothesis is that if the momentum doesn't change, if it just keeps doing what it was doing, then it would follow that blue line to the top, which means I can then think about projecting forward and seeing a new 10-day high tomorrow at about 448. Let's call it 448. That would be the least surprising move. Could it go farther than that? Yeah, it has. But notice that the amount of the daily bars that are above the hull is not very large. So if this thing just continues to drone on, it could get to 450. But to me, 450 is kind of like the natural limit based on momentum. There was a lot of momentum players that were buying this thing all the way up. And how many of them are still left? I don't know. This is certainly the second leg up. So if we treat that as leg 1, and then this is the pause, then leg 2, in theory, over the next 4 to 5 days, should be able to take us to the long-term fair value or the Z3. All right, so that's what it looks like. I'm cautiously optimistic on this one going forward. We'll take a quick look at the sectors. The S&P was pretty much flat for the day at minus 0.3. Let's see, where else we at? To resort. Emerging markets minus 1.54. The Russell, Dow, and TLT treasuries all worse, and Ethereum, the Qs also below 0. So today the big winner was the S&P. Unsurprising to see big moves in energy, Alcoa, Cliff, Wheaton Precious, U.S. Steel. So it was the metals today. The commodities and blended commodities and agriculture were strong. Devon Energy, oil was brilliant, as was oil exploration. In the indexes, Brazil was one of the few anomalies that closed well. I was pleased to see Tesla and Apple continuing to power north. So there is still some room for the new school and old school of tech to keep working. Tesla now with a comfortable $20 margin above its key price level of 900. So I'm still thinking there's room for that to go. All right. In the Patreon room, there's a you can download this little extract from the TC2000 bundle that I've been playing with, the newest strategy. This is a version of the auto framer that I've been really enjoying. And I talked about it last night with a video, but just as a way to recap, if I'm looking at treasuries, for example, if I exclude VIX and then I just take the usual suspects that I evaluate on the basis of reward to risk ratio. Reward to risk ratio. right now, there's only treasuries are the only thing in my stack that test out well, better than 2-to-1 on a return to the 10-day high. And that's a function of just how strong the movement of the last 4 days has been. So the easier money on a simple return to fair value is over, except in the area of treasuries. So when I look at treasuries as an object for possible trading, this helps me place that inside the context of all the things I care about. Like, it tells me what my mechanical entry is, what my mechanical stop would be. That's 5 cents above or below today's high and low. It computes my risk. So that's $2 in the treasury. So entry minus the I stop is $2. I try as a quick placeholder, 1/3 of that to say, hey, what if I were able to use 1/3 of the daily range risk? Could I use that to trade inside the day? If so, I'd have to be able to manage about 67 cents. The highest target of the last 10 days was 137. So I know that's my upper, my 10-day high target. And there's $5.62 between my mechanical entry and the 10-day high. And it tells me that my range stat, the maximum reasonable intraday move, is 34 cents. So there's not much volatility in treasuries. I'm taking this idea from the yellow zone trading report in on the daily reports. Like, I'm finding the smallest range of the last 30 days is $2.02. And then as a candidate for intraday MMRBs, I'm taking that and dividing it by 3 and also by 4. So it's either 67 cents or 50 cent, like an MMRB. I can now compare that to yesterday's price range in the sideways market to see how that compares to that compressed range. So what this is doing for me is giving me insights, in this case, when I sort it this way, about that swing trading 1 day at a time. Now, if I'm interested in something like the daily pop or a daily 1-day pop, I would sort it by this column: range stat, which is the maximum reasonable intraday move, divided by my risk. And then that would give me a ratio of a different kind. That's really a comparison of how tightly compressed it was today compared to the average range. And then that gives me what's a 1-day surprise move out of a coiled spring. So if I was interested in that trade in TC2000, I would just sort it by this column. So I can tell by inspection, 2.2 looks pretty interesting in oil exploration. I'm looking at that column right there, 2.2. And this tells me that I'm very near the 10-day high on it. So I don't really have a good reward to risk ratio to the 10-day high. But in terms of a 1-day directional trade, if I can manage 67 cents, then I might be very interested in trading this one going forward. So this is just a quick look that is helping me quickly find trades that I'm interested in based on market conditions. Now in TC2000, that's just one half of the screen. The other half of the screen will actually give me the, over here, there would be a nice, the standard trading layout. So I can see how it frames out automatically. And I have that format auto framing it for me for the 10-day range, 30-day range, and the yellow zone. So that's one of the 25 strategies that's in the TC2000 bundle. It's the one that I'm working with the most these days to really reflect the way that I'm looking at finding opportunities quickly and then doing all the prep work, letting TC2000 do all the prep work. All right, so here's a couple. Let's see. Don't want to go into the. Yeah, let's go into the daily reports before the sound craps out on us. right, so today we are still in sideways normal. We've had a pretty good 10-day run, but we're starting to stall a little bit on the last 2 days. We're still right on the boundary of oversold or overbought, I should say, on the 10-day. Risk Z has given us a green light for considering upside swing trades, which is nice. The short side rules on the overreaction are showing us the ones that if we were to see weakness tomorrow, that these would be excellent candidates to be ready to short intraday. In the min pains, these are the ones that are the closest to their 10-day high. So Microsoft is of interest. The Dow 30 itself, Johnson & Johnson, and 3M. In the Dow 30, lots of dojis today on that little range compression that we saw that ended in a doji in the Dow or in the S&P. That's why it's not surprising to see a lot of dojis in the Dow 30 themselves. Chevron still very interesting on a 3-to-1 basis. It was up strong today, 1.77. So those of us that were on that one had a chance to benefit. ExxonMobil was also strong in the energy. Nucor Steel, very strong too. Handful of dojis in the ETFs. Very strong performance once more. Metals and mining, energy, oil, oil exploration. We talked about that this weekend. Brazil was the anomaly, and the index is having a very strong day. We'll see that trade in a minute. Auto framer, there's not that many because we're so close to the 10-day high. These tend to be the ones that have been lagging on the move to the top over the last 4 days. And that's going to be a lot of your defensive plays that are still setting up nicely, like energy, Chevron, ExxonMobil, blended commodities, oil, gold, silver, treasuries. These were all the traditional defensive plays that were lagging during the last week's run up to this essentially a new 10-day high today. So if it turns out that from that critical state, the market begins to stall or even roll over, then it wouldn't surprise me to see these defensive plays start having a nice 1 or 2 days. And that's what the auto framer helps us find. The daily squeeze is the one that's really finding the best opportunities where the daily range has been compressed abnormally tight. And then this gives you the reward to risk ratio of the range stat to the range risk. And you can, I would be, of course, interested in Microsoft. I think Chevron and XLB are also on my list. Kind of a mixed bag on the 2-day. You see there were some symbols that really did well, others that lagged significantly. Treasuries are really lagging. That's why if this is a reversal moment, that has a lot of room to gain. But meanwhile, you can see just the dominance of U.S. Steel, Cliff Natural Resources, Devon Energy, all of our commodity guys, and even the 2 energy companies have been doing real well. Rebounded nicely today, ExxonMobil and Chevron. So that's the direction that I'll be looking. I still think they're on sale. You can see that reflected in oil and energy over here also. Oil exploration. And then the usual suspects down here, materials, Latin America and Brazil, just getting it done. Metals and mining too. That's all for today's report. Let's, I want to jump into the trades of the day. I want to start with a couple pieces of standard work that came right out of the weekend report and the trade frames. And then these are both 2 of my standard trading targets. So this is just normal work on symbols that I'm always watching. So this is Alcoa. Alcoa was strong right out the bat. So here was yesterday's closing prices. Here was that afternoon tight range compression, which is about a 50-cent risk box. Felt correct. So you get 1, 2, 3 of those to the open, and it immediately starts running up. As soon as it moves one risk box off the bottom, I just buy it because that's what I do at about 86.50. It moves up. When it holds and starts rolling up, I move my stop in the Uwe exit to here. It has a nice little consolidation and moves up. I move my stop to here. It rolls up and pulls back. I move my stop to here. It rolls up to here, pulls back. Now at this point, I just do a quick math and I say I risked 1, and now I'm holding 1, 2, 3, 4 on this, on that stop. That stop locks in 4R. So this little pullback is exactly one little noise box. And in all the previous ones, it had pulled back a noise box before resuming. So I said, well, now that it's this close to my stop, maybe 10 cents, why not just go ahead and put a second position on? Because if it fails, I'm only losing 10 cents. That's a quarter of an R. And then I'm out the whole position, and I'm still going to lock in about 4R. But if this works to here, then there will be some kind of test on the way out. If it starts to stall once more, if it doesn't break through, then I'll know that the run is done because we're starting to approach, the lunch hour. So I would be ready to harvest this on a 2-hour battle drill, something like that. But if it goes through, then I'm just going to get my stop to no lose on the second position here, and then just trail it by some reasonable rule. So this looks like the lowest risk idea. That's the because why not entry. See how that worked out. Pretty good. So when we transpose that to the standard graphics and the standard management, you can see this is where that first entry was at 86.50 with a 50-cent risk box. It moves up, it starts resuming. The Uwe exit got lucky. Sometimes it happens. Right to the spot, followed the Bollinger Band mean up. Right in here was the because why not entry. There's the 50-cent risk box, and it went up and did another, let's see, from 90 to 91.50, another $1.50 on a 50-cent risk. So this one returns 3R, 1, 2, 3 to a standard sniper exit. Now that I got 2 positions in, I just use the PSAR for my sniper. So that one returns 3, and then the first position is plus 10. So that's 13R standard work in Alcoa. Somebody asked me, why do you trade Alcoa? Because of reasons. I've been trading Alcoa for 25 years. This one was in EWZ. It's a Frog Champion, standard work. This one refused to lose all morning. There was a slight gap up, and then it monkeyed around, and I was detecting this kind of rising triangle. So I became interested because it did not fail. I don't know why, it just didn't. And then it moved a standard risk box out of this mess after 30 minutes into the day. So I just buy it with a standard unit of risk. It moves up 1, 2, pulls back and hold. And so I cash for 1.5. Then I'm just watching it. I got my standard kind of risk box on it here, straddling it. It holds, it holds, it holds. This feels like a possibly fake 1, go 2. And then I get like a 1, 2, 3 kind of entry. I figure, you know what? Let me just go ahead and take a 10-cent risk box on that thing. My execution would be here. So I'm really only even risking 0.10 instead of the usual risk box of 0.20, because that box is the size of that box, is the size of that box, is the size of this box, is the size of this box. So it's halfway through. This feels like maybe a fake 1, go 2. So I'll just buy it here instead of waiting for a breakout above the all-time high. If this thing just gets to here and starts to fail, I'll exit somewhere in here and not lose any money. Maybe I'll make some trivial, but that's better than nothing. I mean, like if you don't want that, if you don't want to win like that, just send me every 0.25R that you don't want. I'll take every single one that you don't want. That's if it just gets to the top of this box where it is held 3 times. But if it breaks through there, it's got one more level to get through to see if it's going to break out of this. If it goes above here, then it's free and clear, and this could be amazing. It turned out to go a little bit and then pull back. So this one made a little bit of money. It was like about a 0.5 or something. So got about 2.0 out of Brazil on this one. So this was just how to get paid and then how to think about fake 1, go 2. And this is an example of a trade using minimal graphics and maximizing the use of support and resistance and pure price action and money management. So it's more frog style technique in that sense. The last one I was monkeying around with today was this one. I was watching Ethereum, and I couldn't help but notice that it had this very interesting event where it almost felt like after initial monkeying it around, there was like an explosion, and this thing started going up in bigger steps up, and the pullbacks were creating this downward support channel, and the size of each upward move was getting bigger. So you have this expanding parabola or something to the upside. And then I noticed somewhere around, this is in Greenwich time, so this was probably around noonish. I noticed that it had the maximum move to the upside, and it sold off right in line where you would expect if there was something going on down in here in the minds of the buyers that created some condition that looked like that, then it would be finding support right exactly where it should find support. And it seemed like it was. So I just drew a quick risk box around it, the same size hesitation or risk box that it had at all of these, sort of a MMRB by inspection. And I said, well, if I took a mechanical entry here with an initial stop there, then in this hypothesis, this thing should be able to get up into here if I accounted for the decay in that upward parabola. It feels like it's running out of steam. Otherwise, it would have been going like this, but it didn't. It's starting to run out of steam. So then I just plotted the midpoint and said, well, if it breaks out of here, I have 2R just to get to about this price level. And why not? When people were buying it, it was moving hard. So I went ahead and bought it. As I was drawing that up, it broke out. So I went ahead and bought it with that tight risk box. And I was expecting some kind of fat reward in that against some kind of little marginal risk. But what we got was instead, not so fast, Smarty. I got my little entry. It never even got to that. We just decided at this point to roll over, and I took the -1 hour loss like I'm supposed to, because I don't know that it's not going to come back and visit all of these support levels all along the way, because it can move like that too. And then all it really did was just monkey around in this little range all day. So that's the train that never left the station. Turns out that it had come in and they were just taking it over to the barn to do some maintenance on it. So those were my trades for today. It must, yeah. Well, that's what I get for talking to you instead of trading. A reminder of how I'm always on the wrong foot. Well, somebody's making money now. That's good. Long term, that's good for me if it's going up. I have a swing trade belief in it. Let's see. I guess we want to go to the traders' trades today. There weren't that many in the room, so this will go pretty quick. Here's some nice work from Tim. Let's see where. As you review his markup, what's the feeling that you get about Tim as a trader? Pretty darn professional. So it turned out that the only time that he could trade today was in this little space because he was taking care of the child. And so without having Will in the game, he kind of withdrew and called it as a day. So he came back to do some bar by bar trading. He's mindful of the fact that ex post pattern recognition only gets you partial value, and it's good practice, but he's not including it in the trade log. That's good practice. The best way to go about that is to do it the way that we do it, where you are screening the price action and you're only seeing a bar by bar action and recording what it is that you're doing. This is a good way for you and your trading partners to help each other trade by masking the name of the symbol and even the time frame. You could each prepare. What if you were working with 4 people and each one of you prepared one trade frame the way I do it? You would have a chance to really study it and see what's going on and act as a coach to the other 3 guys who are each trading it forward bar by bar. And then with your solution notes and your commentary and observations about the price action, but also about their decision making, you could have a very efficient way of speed running price action bar by bar. There's no better simulator than that, except for the actual market itself. And it is the actual market. The only thing is it's not live, but it doesn't, you don't have to wait hours and days for the next bar to, you can advance it 1 bar as soon as you're ready. And that's very time efficient. So what he noticed at the start of his trading was these higher lows, and he saw the breakout above the VWAP, and he treated it as a K2 emerging dragon and above a break above the Z3P VWAP. It moved in his favor a little bit and it pulled back and he got paid 0.2 or 0.1, sorry, for the day. And then he had to check out because taking care of the child. So he later on, after some later work, he looked at this as a K2, as a higher low, or as a fake 1 go to. Either one of those is legit as a reason to trade it. Even if you just look at it as the PSAR flip with an entry in here at the crossing the VWAP and the PSAR with a tight stop, the sort of that little stop, that execution stop is even smaller than his standard risk box. So there's no way he's going to take more than a 1-hour loss, and he would get paid somewhere in here. I would say not later than crossing the dragon on this rollover, because you already have you're pretty close to the criteria for an owl short right here. He then looked at this, though, as another K2 and a PSAR break, standard risk. He'd have gotten paid seriously on that one. On this massive sell-off, you might have looked at those three major meltdown bars and said, you know what, I could get short on that basis when it crossed the VWAP and the PSAR, and you might have gotten this trade with a same tight risk box. And then the standard K2 after the harsh winter and reversal. This is actually not even a K2. This is a SSC, as he notes. That one would have gotten paid. And then somewhere in here is the Kata 2. So there was probably, by his view of standard trading of this, he's understanding it, something like 2.3R was available, although his 0.1R with constant MMRB was the only thing that he's counting, because this is the moment where he's really judging how he's trading with skin in the game during live market conditions. And I think that's very good. And you can see now. So some of his questions were, the SSC in the morning before the start of trading corrected the deep market choppy sideways. And I would say, that's what he's talking about there. That little K2 formation gives this one some legs as it crosses. And you'll see, actually, that was a pretty solid, except for this little piece, that was a pretty solid support level for all the upward urges. So I agree with that. He says, is he adding too much discretion, and should he follow the patterns? Well, I don't see you using too much discretion here. I think the patterns that I'm seeing are legitimate K2s. And then this one was kind of a combination Z3 pinch breakout also. So I think you are following the patterns. Trade 5, let's see, 1, 2, 3, 1, 2, 3, 4, maybe 5. Didn't go to 1R in hand, and so he didn't increase to no lose plus dinner for 2. For me, if I'm 1R in hand, that I don't wait for 1R in hand to go to no lose. Like if 1R is here and I entered down here and that thing is starting to stall inside here and I'm above my average win, or I just see an opportunity to get my risk out, even though it hasn't gone to 1R, I'll just do that now. I don't want to lose money. I'm willing to take no lose plus dinner for 2 all day. What's the harm of that? You know how to re-enter. I would say, to answer your question about should you have stuck to the rules-based PSAR trailing stop instead, we're way too early in your trading cycle on this to answer that definitively. You really want to see, data and your response. So what does the data say if you had followed one exit strategy versus the other? Does the data suggest that one is better for you? And then how do you react to a set of 30 trades? What you do is you take a look at a histogram using exit strategy A, and then exit strategy B, and then you integrate that and you say, which one feels better for me? That's the right way to do it. So you're accumulating evidence and you're still early days in gathering 30 data. But I would take a look at Griff Cooper's Cornell note sheet on the exit strategy lecture that we just did last week, and work through that lesson in the foundations There's a link to it in this Cornell note sheet, and that'll give you some ideas about how to think about the exits. There's not ever one clear, easy answer for all people on every time condition. I think what you want to do is, as long as you are minimizing risk, respecting the fact that you know how to re-enter and that your ego is not attached to the trade being right, then it allows you the freedom that if I'm thinking about it too much, I'm ready to get out. I want there to be compelling reasons to be in it, and I'll take reasonable exits otherwise. That's the way I look at it. I'm looking for reasons to get out of trades, not to stay in them. See this, not sure whose this was. Excuse me. Not sure whose this was, but this is perfect technique. So even if you didn't do it, I would be jumping to take credit for this one. That's your harsh winter. It's interesting to note that it only took this little bit of not failing further to change the RL10 to spring. And then a second really convinced it to be spring. And now the spring is where it bottoms out. Crosses the PSAR just like downtown. And perfect exit. This was an opportunity right in here. Like a 1, 2, 3 after the test, the resumption for the second leg. This one would have been tempting. That one would have been very tempting because now you have another. This one gives you a COTA 2 off of this entry, or off of that low, I should say. And then this one gives you a COTA 2 off of this one. So you're getting a reinforcement. Like the size of this sell-off, this little sell-off was only half of that, and it already started to resume. By the same token, that would have been interesting, except we're starting to get close to the end of the day. So those were some regions, especially because you're on the correct side of the VWAP for upward movement. Who was that? Ugh. Glenn. Oh, so Glenn is our professional musician, just sent me a really nice couple books that are from a master craftsman of the piano who's played with everybody, who's written a couple books that sound like The Living Sword, only it's the piano. Self as instrument as a way of life, the way of the living instrument, that kind of stuff. So I'm looking forward to reading those two to see how other craftsmen in other genres and disciplines find that way to inner peace and inner expression. It's very much like the that book that revolutionized tennis and coaching and the psychology of tennis back in the 70s, The Inner Game of Tennis. I remember reading that as a kid in high school and it having a profound effect on the way I thought about sports in my own life, even as a 15 or 16-year-old kid. I remember he made an analogy to Chinese philosophy, which in the 70s I never saw anybody else doing that. I would have been reading a lot of Chinese philosophies in my teens, from the work of Arthur Waley and Thomas Cleary and those guys. And I was interested in, Chinese ways of thinking. But this guy, and I can't remember his name, but he wrote The Inner Game of Tennis. He's got an interesting coaching program too now where he's certifying people to do that. And he used the analogy that if you wanted to play perfect tennis, there were like two ways that you could do it. One of them would be sort of like Lao Tzu or Chuang Tzu, make yourself perfect and then go play tennis. And then the second way to do it was more like a Confucius or a Mencius approach to excellence, which is to, well, make a study of the game and rigorously, ruthlessly, continuously improve your play by tightening up the areas where you are weak, exploiting your strengths, understanding everything about the game and the tools and the techniques and the spirit of it, the culture of it, and become a real student and scholar of the game. And then you could begin to approach perfect tennis. And I always remember that because I have seen that trade-off in the top-down to bottoms-up approach to mastery of things in life. And what really stood out for me back in the 70s was that here was a Western, not a philosopher or psychologist, here was a tennis coach that was writing about things at a profound and deep level that I didn't see anybody else writing about except Chinese philosophers that had been dead for 2,000 years. And so I think for that reason, it kind of stuck with me when I was 15 and never forgot that. Always thought that was a funny line too. So yeah, so Glenn is the musician and he's got some beautiful music for sale on Amazon. He is a master of the church organ, and he has the most beautiful Bach and Brahms concertos that you could ever want to hear, and all the sacred songs. Love listening to his work. And he's been making a transition to full-time trading for a living from being a full-time professional musician while raising a family with small children. And he's been doing that systematically over the last 10 to 12 years. And watching him at each stage of his progression as he comes to every research weekend and contributes where he is, his long-term approach is maybe the least surprising story of success I've ever seen, because there's a guy that understands what it means to have mastery within a discipline. And I think his musical training has really helped him with a natural personal approach that is correct for him. So Glenn, who's been working with Ken H. and the Forex trading group on other projects, has been reading our latest stuff with interest and saw this opportunity. So he says, hey, I was expanding my trading horizons to look for more SSC options in a relaxed manner. Saw this one after lunch, put the trailing stop on immediately after entry and walked away. Came back after the market closed to get that trade. So that's how you do it. That's nothing more than the Bill Scheidt PSAR flip trailing PSAR stop in Devon Energy. Saw the pattern, made the trade, managed the risk, followed the rules, accepted the results. So sometimes that's what you do. Chris, I think I answered your question about the WMB3 strategy and whatnot a little bit lower. Let me go right. I thought I'd answered that. Hold on. Oh yeah, there it is. I did. Just hadn't refreshed. So what I said was a strict WMB3 is 3-minute charts, long only, no other info required from any other time frame. But we have been exploring individually optional rules that I can't comment on with strict approval. I can tell you the WMB3 is going to position you for very favorable results depending on how you complete the task and the targets you pick and whatnot. But WMB3 was my first and maybe best effort at describing the morning hook specifically. So it's a trade that I wanted to make in a symbol I wanted to make. So that means, sort of by definition, it could have been on a swing signal the day before, or a continuation pattern from the day before, or the auto framer, or one of the usual suspects like a frog champion, or any other symbol that you specialize in. That's true. The strict rules are optimized for gap down morning hook days, and it allows you to get started with the trade at about 10 minutes in on 3-minute charts, because it takes about 3 bars for that thing to have sold off and started to reverse and give you the candle breakouts. So somewhere in about the 4th 3-minute bar, it's not unusual to see that work. And that was the reason I developed it that way. The other thing that I noticed was later on that if you see harsh winter conditions anytime during the day or whatever time frame you're working on, and then you notice that you've got WMB3, you're going to get almost magically, you'll be entering somewhere around the SSC entry. It might even get you in a little bit earlier than the PSAR flip, but it finds exactly those kinds of opportunities. What I like about it is that's going to be a way to get into the trade early intraday on 3-minute charts on gap down days, because that PSAR will not have flipped all the way and come all the way down, and the dragon has ways to go. So this is a way to early get that first trade out the gate. So that's what I would say. Now, other guys that have looked at this from daily bars and weekly bars notice that this is very much like the channeling signal. So there is a strong connection between routine oversold conditions and like a 1, 2, 3 entry going the other way. You'll notice that that is a common frame of reference, a standard approach that we use in multiple time frames. So I can say that there's a lot of gold in that mine, and you got to find the rule set or the targets or the time frame and the visual display that works best for you. You've noticed in the last couple of weeks that I've been toggling back and forth between almost naked price with the price boxes, so a very sparse monitor or dashboard, and the standard kind of complex full up RLCO framework that has, all the Bollinger Bands and the regression lines. So, the WMB3 allows you to trade that with a very sparse indicator set in the way I demonstrated Alcoa today. So I would say it's worth investigating. And the way I use it is pretty strict in the morning. It helps me get in around 10 minutes on 3-minute bars. Good research project for you if you're interested. You can present next year at the research weekend. That would do you no harm. Let's see. All right, here's Les with the 5-minute Aussie, and he plays one standard trade. There was kind of a, we can call it a, here's the Z3 pinch, and this is actually looking almost like a super pinch, because I'm noticing the RL 270 here and the 90 and the 30 and the 10, and this is already pinched. So that's a super pinch condition. You'd have been justified in taking that breakout here and getting paid. Even if you waited to just take that exit, you'd still made money on that entry. And then he plays the reversal, the PSAR flip. It has a move almost down to the Z3, and because he's on 5 minutes, he just says, you know what, I'm not going to let this go more than one standard deviation retracement, and I'm going to get paid 2.3. That's a money management exit. That's also like giving back one MMRB box, but not more than that. So that's a nice way to do 2.3. I would notice that this move here is a K2 to the downside, and this one is like a K2 to the upside that probably would have scratched. So he got what was really available today out of that sequence. That's good work. So that one. John M. Forcing it pretty hard in the middle of the Crocodile River here. And I've said before, after like 2, I wait to see the Z3 breakout. So we did. Takes a tight break. This one, the stop and reverses immediately on him, so he gets caught. I don't mind those. You guys have been doing so well on this thing that when you do get paid, it's paying off. I might have been a little stricter and not given back that much. You gave back about half. And especially trying to dig out of this hole, I might have been more aggressive on capturing profits. By the same token, if we're going to look for margins to improve, maybe this one here is the entry on the PSAR break instead of the Bollinger Band mean break. And then the 1, 2, 3 exit is here. 1, 2, 3, or 1, 2, 3 is right here. So either one of those exits gives you a better return. This is pretty good on the short side. I might have been more aggressive scratching, but still, that's not too bad. This one is still worth a shot. I might have been more aggressive on stopping. Good scratch, good effort. The one you didn't take was the one that might have brought you back to even. So there just wasn't much room in there for you today. This might be over trading in the river, is all I will say. The fact that you'd committed to those two almost forced you into those two. And that puts you down -2 for the day already. And just 2 unusually compressed ranges in the Aussie. That's unusual behavior. That's just the kind of day it was. And so those results are not unusual for that kind of day. That's a bad run of cards. And that will happen. But the rules are sound, so stay with them. Luke comes in with, I can't read this here. It's at 0.7 for the day. And he got chopped up in the same slop you did. He might have gotten more out of this one. He gave back more than a full R. And then he was a little bit slow, maybe on the short. And then he took, I think, the same exit as the previous one. This is the better one. That's the second 1, 2, 3 that he could take. And then this reentry is maybe a tad slow. And then this one definitely gives back too much. This was sort of like kryptonite to the 5-minute Aussie. This was a fractional win. That's what I think about best practices could probably get you on that one. The Z3 excursion and the reversal to enter here instead of there. Yeah, maybe so. Or to cash there. Yeah, I'd probably agree with that. So micro improvements available. Remember, if you can find 0.2s and 0.3s on these days, then you're going to be postured with resilience. And on days when it explodes in your favor, it's going to allow you to exploit for big wins if you just do what you've been trained yourself to do. And we saw lessons already, and we saw the standard work piece there already. Okay, so all right, that's everything I got for today. Let's get this thing stopped.